So FOMC is about to be released, and I'm going to be looking to trade gold today. I already know what I'm going to be looking for if the Federal Reserve comes out hawkish or dovish, meaning if they want to continue to raise rates or if they say that they're going to start cutting rates. When the rate decision's released, a lot of times you're going to see volume, so you need to be careful because you're going to get a spike up, you're going to get a spike down on gold, so we need to be careful for that. I want a reason to take the trade, and then we just have higher probabilities for the markets to actually continue in a certain direction. The first thing I want to understand is market expectations. Market expectations is the first thing we're going to go over, and the second thing is going to be surprise scenarios. These are what really gives us the moves in the market. If you get a surprise, that's when you're going to see a move. If we get what's expected, if we get the pause, or if the Feds don't change anything, this is when you get stuck in consolidation with volume. So you have to be careful for that. And then the third thing on this is going to be the bigger picture. What that means is, especially being today, because the Feds are releasing something called the dot plot, which is their forward projections, is the bigger picture going to be changed today? Where are the Feds looking to have rates in the next 1 or 2 years? Are they looking to cut rates? Are they looking to hold rates? What are they looking to do? The last dot plot, they actually confirmed that they were going to do 3 rate cuts before the end of 2024. So one of the big changes we're going to be looking for is, are they going to push against those rate cuts? If we're looking at dovish comments, which basically means we're going to continue being accommodative and we actually want to lower rates because maybe inflation is not that big of a deal. So that's technically what, that's basically what dovish means. I'd be looking for US dollar weakness. I'd be looking for gold to go bullish. I'd be looking for US 30 and NASDAQ to also go bullish. 6, 5, 4, 3, 2, 1, 0. So you'd be looking for gold to spike higher here. You can see gold. I'm in gold buys right now. Gold buys pushing to the upside, dollar pushing to the downside. They just confirmed another rate cut. So we can see gold. If anyone's in gold, it is still pushing up to the upside. So gold is still holding this zone. You're getting a lot of fucking volume, so be careful. I like the dollar weakness right now. Once again, the rate cut was a pause, but this right here, the 4.6, be very careful holding gold buys right now. If you're in it, protect yourself, but this is still a good move. Fed funds rate, end of 2024, 4.6%. And look at the previous, 4.6%. So that's not new. If anyone took anything with dollar weakness, I would say just be careful on holding it. You guys all took a win? Hell yeah. Good job. Good job. We'll do the W's in okay, everyone's on a high right now. Let's do the W's. Hang on, give me 2 seconds. It only counts if it's on Instagram. So 2 seconds. You guys never wait. You fucking already doing the W's. All right, Fed's rate decision, gold buys, dollar weakness. If you guys get a W from the rate decision, put a W in the chat. Let's see the wins. Easy wins. Everyone, 300 traders, all winning today. I want to take partials again on gold. I think I'm going to. Josh, bro, I can't thank you enough. Ray, I think Ray, that's the Ray. You train in Elevation, right? I think I met you at the gym. Thanks, Josh. That was sick. I am so happy that I'm in the right direction, learning fundamentals. Of course, man. Yeah, I'm happy you guys are here. What you want to pay attention to is Powell's speech. Everything I talked about right here, you want to watch for these statements.
Down to 2%.
He already said it.
That is our goal.
But we stress over time.
Americans believe we will achieve that goal, and they should believe that.
But we stress over time.
Over time. But we stress over time. And so
this is why having a news feed is so important. This is why it's worth either paying for it or paying to have access to one through a community like ours in Discord, because I have the news feed directly connected to our Discord. This is a live stream. There's a delay. My news feed, if anything comes out and he says something that's important for the markets and you want to take a trade based on that, the markets already have access to this same news feed. I want that same information so I can take those trades too. Okay, so Powell's done talking, and I want to break down what happened today and some of the moves that we saw and the trades that we took. Like you heard earlier, I was in gold buys. I had entered my gold buys when it broke structure here, and I ended up taking partials and going break even here. I trailed my stop loss. This little wick ended up taking me out, still continuing higher. Now, I did not re-enter gold buys, but we want to at least explain why gold is still continuing bullish. And I want to break down, if we take a look here, why the dollar is continuing to the downside. If you break down what was said today, nothing new happened. The Feds came out, they paused rates. The Feds came out, they confirmed 3 rate cuts for the year. Now, the best explanation that I would have for why the dollar is still continued weaker is because over the last 2 months, we've seen inflation data come out higher than expected. What that's telling us is that we're seeing a bumpy ride to get to the 2% goal of inflation. Now, what that means is the markets start kind of teeter-tottering. We're like, hey, look, are the Feds going to actually continue with their confirmation of 3 rate cuts this year? So because of that, this is actually, it's not necessarily considered a surprise, but the fact that the dollar is dropping the way that it is, gold is pushing up the way that it is, even though this isn't new information, what this tells us is that the markets were actually expecting the Feds to push against those rate cuts. They wanted to see if they were going to come out and say, hey, look, last time we said 3 rate cuts this year for 2024, we don't know that we can do that because inflation is still kind of sticky. Powell came out specifically while he was talking and said, this has not changed our broader picture or the outlook for the Fed. Once that was said, dollar dropped, gold continued higher, and those are the moves that we're seeing because the markets are still now confirmed we're going to see, or we're likely to see, 3 rate cuts by the end of 2024. So while we were watching him speak, I already knew, or at least I anticipated, the direction of gold and the direction of the market. This is why paying attention to these statements, this data, and the news is so important, because I don't have to wait for like a moving average break. I don't have to wait for a fib retracement. I know what interest rates do to gold, and based on that, I can take my trades on gold regardless of where it is in market structure, because you can see here, when you're applying fundamentals to the charts, fundamentals do not care about your technical analysis. Yes, technicals is important. I had my stop loss below a support area. I'm still using technicals, but I don't necessarily need it to line up with my entry if I have the chair of the Federal Reserve giving me a reason to take buys on gold and be bearish on the dollar. That's what really matters, and that's why paying attention to this stuff is so important, because this is what drives the markets. What you were seeing before when I was talking to the screen is I manage a group of live traders, and we trade live every single day. I give them the same analysis. We do London session, New York session. We trade gold, currencies, all the pairs. And while we're trading, I'm giving them reasons why I'm either entering or just not taking a trade at all. If you want to be a member of this, or if you want to join us, we'll put the link in the description below. I hope this was helpful for you, and I'll see you guys in the next trade.